And I'm just going to say again that Alexander is with us, the head of Asia from SFOX. SFOX is one of, if not the leading independent crypto prime broker. And it's a particular area of focus that is critical to the crypto markets, but not well understood by everyone. And so I'm going to ask Alexander to introduce himself, SFOX, and his personal journey that got him into blockchain. Please, Alexander.
Well, thank you for that intro, Matthew. I'll try to keep it short. So in terms of who I am, I'm the head of Asia Pac for SFOX. SFOX is basically a crypto prime dealer. We've been around since 2014. As Matthew mentioned, we are backed by him as well as many investors. And by crypto prime broker, basically, we aggregate many different exchanges and OTC into one order book. So this really solves two issues for our clients. The first issue is basically, liquidity is very diffuse across the world. Prices are very different, even though it's the same asset, and we are able to aggregate that for more relative value arbitrage type of trading. The second benefit is basically protecting against issues of price fragmentation, whether through flash crashes or downtime. So for instance, we've never failed to meet a stop loss because we have many sources of liquidity. So at a high level, as a prime broker, we are essentially doing what a lot of the prime brokers, traditional prime brokers like Goldman Sachs or Morgan Stanley do for hedge funds, but we do it with crypto and we do it with more flair, let's put it that way. So in terms of my personal journey, I'm a bit embarrassed to say, but my personal journey, why I got into crypto was because I was actually at a hedge fund when Mt. Gox blew up, and I really got my attention at the time. And I was able to trade on my personal account without getting permission from my compliance. So there was this wonderful opportunity for me to trade, this burgeoning asset class without having to ask permission every time, and every single time I went in a position and exited. But as it happens with a lot of finance people, particularly those who are perhaps more technically inclined, is that once you get into crypto, even you might have got into it for just purely trading reasons, it's very difficult to let go of the attractiveness of the technology. As it drew me in, I basically started a payment services company involved in crypto. I then joined SFOX at the beginning of 2020 when SFOX wanted to leave the US. For many reasons. I mean, not leave the US, but wanted to have a base outside the US, let's put it that way. And I knew the CEO Akbar a long time ago from university. So, I was using SFOX for my own trading purposes. And when I was speaking with Akbar, just catching up with him, and he told me of his plans, it was a great time to start an office in Singapore.
Yes, thank you very much, Alex. So I think you've made it clear, but just to reiterate, what SFOX does is by aggregating the order books of exchanges and OTC providers, it can give you access to greater liquidity, better price execution, but also less likelihood that when you have to make a trade, your own specific exchange or OTC provider might be temporarily down. And that is a very big deal at both ends of the spectrum. So when markets are crashing and you need to get your trade completed, you can't afford to, unfortunately, find out that your provider is down. And the same is true in the other direction. When the markets are zooming up and you're trying to sell, you need to, or buy, but hopefully you're selling when prices are zooming up, are very, very high. You have more likelihood of being able to execute your trade. So if that's what SFOX does, how does that play out in Asia? And so, obviously for us in the West, in the US or in Europe, we look across and we see these huge players, Binance, OK Exchange, and others. What is it that SFOX can bring to Asia that Asia doesn't already have?
So I think just taking a step back, right? I think the key thing about all these centralized liquidity providers is that, from let's say from outward appearances, from sort of a layman's point of view, we kind of look very similar. Right? Some people would say we actually look the same. And I say that because the platform looks similar, the UX might even look similar. Some people joke that we're all Bloomberg Black UX right now, and it may be lost to somebody who's not very sophisticated why how one platform can differ from another, right? So I think just taking a step back, I think I mean, to give credit where it's due, for instance, right? I think platforms in Asia have also themselves, even if they're large, they've moved away from just being that centralized venue of choice and really trying to compete one-on-one against others, right? So to give credit where it's due, for instance, right? I think OKX, for instance, is quite interesting. Since FTX blew up and Binance essentially became number one choice for many as a liquidity platform for many investments, OKX became, I would call a DeFi payment, a DeFi gateway. So a gateway to DeFi, but with all the regulations that were in, and it sort of was able to, because it's a regulated exchange, it's able to meet all the KYC, AML, but bring DeFi to other audiences, right? So from my point of view, what SFOX does, and it may be more niche, but I think it's still important, is that we bring relative value arbitrage trading to crypto. And what I mean by that is that crypto is very similar to the FX industry in the 1990s, right? You speak to people with a bit of salt in their hair, they will tell you that FX was a very interesting place to arbitrage prior to the introduction of the euro, right? Essentially, you had these 15 European currencies that were highly correlated to each other. And once the euro came about, that arbitrage strategy was gone. But from our point of view, this opportunity just keeps on increasing because there's more and more cryptos that are being introduced. There's more and more liquidity that's brought to the ecosystem. So there's tons of ways to be able to trade on a relative value basis, not on an absolute basis, right? So you can do things like doing triangular or four-legged or five-legged arbitrage just across spot. You can do basis trading, spot versus Delta One derivatives, or even right now, spot versus options, right? So non-Delta One, because there's effectively a lot of inefficiencies when it comes to Delta hedging or Gamma hedging. So I don't want to go into those nuances, but essentially, there's space for many different strategies in any asset management industry. And what we sell particularly well are the high frequency, very quant-driven, relative value, arbitrage type of driven strategies. We can obviously service long only too. We're not turning away your business, obviously. So please do come to us if you're a private equity firm, etc. But we can serve both angles. And that's really what our forte is.
Thank you very much, Alexander. So we heard earlier on today about the way different types of investors are beginning to invest into blockchain and crypto and which particular strategies they're gravitating towards. And for the purposes of this question, I'm going to really simplify the world into, if you will, everyone that is a retail or an individual investor. Then I want to peel off sort of traders, professional and pro traders, including crypto hedge funds and those types of folks. Then I want to have family offices, multi-family offices, and other wealth advisors. And then the fourth group would be large institutions, the Temaseks or the very big sovereign and pension fund insurance institutions. Would you just walk through those four and give us a sense of where you see them mostly focused? So, is it all about Bitcoin? Is it more about altcoins? Is it more about venture? So just walk through the four categories. Where do you think the state of play is right now in terms of investors engaging in investment strategies for blockchain?
Yeah, so That's an interesting question, and I'm not sure I'll be able to provide a comprehensive answers with such a generalization. But just going back to those four groups that you mentioned, I think for retail, it's not a very complicated answer, right? Essentially now, particularly with the introduction of ETFs, it's a simple long only play. There's vast majority of investors don't really need to go into any of the altcoins. And I mean, I guess the perfect example of this is, my mom always asked whether she should invest in crypto, and knowing that she's not she can be quite forgetful about her secret password. I said, no, please wait till you have ETFs, right? Because I really don't want you to handle all the security issues, right? And the moment, I know we had it before with Canadian and Swedish ETFs, but now that the US is in it in large liquidity, I have there's no compunction against saying, yes, please, mom, you want to go into crypto? This is now it's fully ready for an investor like you. Yes, I know there are more sophisticated retail investors, but for the 80% of retail investors who want to have exposure that way, whether directly or indirectly, they may even have it through some of the pension fund managers, this is sufficient for their needs, right? I think the second element is, to me, frankly, the most interesting, because the second group being really what I call the smaller funds. I would call that maybe below 100 million in assets, right? And maybe managed by 2-3 people. And I say this because I think, why is that the most interesting? Because that's really like being in a hedge fund in the early 90s, right? You have access to so many strategies, right? Whether it's basically long short, whether it's statistical arbitrage, whether it's activist or event driven macro type of funds, and all of those headings and strategies that are used in the hedge fund world can similarly apply to crypto, plus the long only side, which is just private equity or venture capital long only, and that all those opportunities are available to somebody with a lower AUM, and in fact those opportunities are just increasing. And from my point of view, I'm particularly interested because, as mentioned earlier, there's just so much relative value trading. You don't have to take long only positions. You can take excellent risk adjusted that give you well adjusted risk reward returns. What finance people call Sharpe ratio type returns, by being able to do relative value trading. The third element, please correct me if I'm paraphrasing this wrong, but I'm assuming you're talking about larger funds that are below the sovereign wealth funds, right? So the non-Temasek.
No, sorry, the third group, because I know you have such an extensive network of family offices and multi-family offices in Singapore and Hong Kong. I just wanted to talk about them specifically, as well as the firms that advise them.
Yes. Yeah. So for family offices, this is I think they are similar to the other group I mentioned in the sense that they have enough of an AUM that's also not too large where they have the full gamut of strategies available. But at the same time, I also want to recognize the fact that a lot of family offices have an interest in learning about the technology of blockchain because they can apply it to their own family business, right? So for instance, I was speaking to a shipping company, family office, and the conversation basically really went more into the benefits of blockchain technology. And from that point of view, shipping is a very archaic, very highly inefficient, not transparent system of financing. I don't want to go too much into it, but essentially there's a lot of improvements that can be made by blockchain. So from their point of view, they can do all the strategies that are involved in the second group that I mentioned, but they also have an inherent interest in investing in certain protocols that will benefit their business and taking a more private equity or value investing point of view. I mean, most family offices are not as sophisticated to go knee deep into relative or value or arbitrage type of trading. I'm talking about the program algorithms, but I think this fundamental approach into investing in protocols that will help their business is really something that's extremely powerful. And frankly, it's only really come to the fore I would say, in the past 2 years. As more and more regulators clear crypto, more and more family offices are feeling comfortable talking about it. So we come to the last group, which is basically the sovereign wealth funds and the large groups. I suppose it goes back to the original, going back to the idea of what can sovereign wealth funds invest in, right? So if you're and really I'm just going to bring up two examples, right? So you brought up Temasek, and then you also have the world's largest sovereign wealth fund, which is the Norway sovereign wealth fund, and they have very different approaches to investing. Right? So the Norway sovereign wealth fund, for example, is not active at all. It's literally taking passive positions in every company that lists in Europe, and not taking an active approach. So from my point of view, the Norway style of sovereign investing, it's just not there yet. It's not possible for a sovereign wealth fund to take that passive style of investing because there's just not enough market capitalization to crypto. Now, the Temasek approach to me is actually probably the story is actually quite similar to the family office story, but on a macro scale, on a country scale, right? It's going back to what blockchain can do in terms of transparency, liquidity, efficiency, to bring that kind of improvement on a country level to how a government administers itself, how it does its economic activity is extremely powerful, right? And a sovereign wealth fund has a lot of incentive to invest in the kind of protocols that will benefit this kind of technology. And they obviously have, a sovereign wealth fund like Temasek obviously has the means to do so. It's not really in their interest to do the relative value arbitrage. Much as I like them to do it, it's not really in their interest to do relative value arbitrage trading. They just have too much capital. And it's more for them to take a 10-year approach, long only type approach.
Yes. If I could build on that, Alexander, we were talking to Temasek at Token 2049 in Singapore last September. And firstly, I'm old enough to remember when Singapore rolled out broadband access and got almost 100% internet access before most countries had even begun. So, there are advantages to having a very affluent but relatively small country that can move quickly. And clearly, Temasek is exploring all of blockchain and how it can be leveraged at the national level, including things like digital identity and rapid payments and other things. So I think it is very interesting. We're getting some questions in, and one of them I want to ask is about specifically about someone says, if they were getting started, so assume for a minute that it's a first crypto strategy for a family office or for an RIA, a wealth advisor, what would be the best practices for them to get started? That's what they're asking. I wonder what your response to that is.
Okay, so I'm somewhat biased. I would say that if you are a very technical person, in other words, you can program your own algorithms, I would highly suggest to you that you do relative value arbitrage trading, because programming bots to do arbitrage, it's really very low risk. And as I mentioned earlier, the opportunities keep on increasing. But it can't be, you can't arbitrage by hand anymore. It's all bot driven. You need to be able to have, I would say, at least an intermediate level of coding capability and really understand infrastructure in terms of latency, right? So if you have a non-technical approach, I know this sounds a bit boring, but essentially I would invest in a collection of ETFs, and I in crypto ETFs, and I'm talking also about the development of crypto ETFs in the future. What I mean by that is that you have simple long only type of crypto strategies that are coming to the fore in the US now. But just like how ETFs develop in the US, I think there'll be more advanced ETF strategies, and they'll come very soon, in my opinion. Right. So, for instance, in the US now, for instance, I like trading options on large cap equity. Why? Because if you're long only, essentially you just have to worry about what they call the bleed. You don't have to worry about whether it goes up and down, right? And in the past few years, I just do it through ETFs. I don't go long the option by itself. It's expensive to manage. I much prefer, and an ETF is more regulated, right? And the other thing is, I can also copy hedge fund strategies to ETFs now. For instance. So for instance, there are activist hedge funds that are quite interesting, and I don't have to invest in the actual hedge fund itself. I can just follow an ETF, or I can just invest in an ETF that so-called follows the coattails on this activist hedge fund. Right? So I think the development in crypto ETFs, where it's very good, soon going to go beyond Bitcoin into sort of more advanced strategies. Now, if you're the second or third level, I would highly suggest that you invest with blockchain co-investors, because frankly, the world of funds is crypto can be quite opaque, and if there's any type of strategy that is best suited for a fund of fund strategy, it would be blockchain investors. I say this because I used to be in a fund of funds myself for hedge funds, so I've looked at hedge fund of funds, I've looked at private equity fund of funds, venture capital fund of funds, and really venture capital fund of funds is really where most investors would benefit if they're more sophisticated, they're more net worth, and certainly blockchain co-investors is what you're doing is really where you bring in the most alpha.
Well, thank you so much for saying that, Alexander. At the end, I feel like I should reiterate, we're not providing investment advice, we're educating, and but I found your answer actually a very good one for the following reasons, though, not for the last part, for the first part. We always say that investors need to be good at the investment strategies they pick. And if they're not, then they should probably be passive and find someone else who is good at those investment strategies. And I think you made that really clear. I mean, you can't be a high frequency arbitrage investor without understanding technology and how to build and deploy it. And if you're a family office without those skills, then yes, a diversified portfolio of ETFs that are crypto and blockchain related would still give you a lot of exposure to a lot of the potential upside without needing to build technology yourself in-house. And that made sense to me, the way you said it. There's another question that came in, and I know we don't have a lot more time today, Alexander, but there's a question about what comes next for SFOX. What other jurisdictions, what other offerings, what are you seeing demand from in Asia, and what more will you be doing in Asia?
So specifically with regard to Asia, I think what is really most interesting for us is providing liquidity to other exchanges. And this may seem counterintuitive to somebody in the States or even somebody in Europe. But the key thing to remember is that most countries in Asia are basically capital controlled countries. It's very difficult to move capital in and out, right? So what has happened is that a lot of the local exchanges in Asia, which are local currency denominated, don't have the same type of highs and lows that we would see in a more freely traded exchange. Just at a very high level, it's about maybe 15-20% off the highs and lows each day, right? And you're talking even about large countries like India, or in Southeast Asia, large countries like Indonesia, Vietnam, Philippines. So what we do, which specifically in Asia, is that we can provide liquidity to these exchanges so that their prices are more in tune with the global market, as well as to attract more institutional investors to these exchanges, right? As opposed to just servicing the local retail. So that's specifically with regard to Asia. I think globally, really, we want to really provide, be the trading platform of choice for clients. And for that, really the idea, the traditional example I would say is something like interactive brokers. And I like interactive brokers when I trade just traditional assets, because essentially they provide cross-margin capability. They provide many different types of exchange of assets, and there's a very efficient way for me to execute, arbitrage strategies, or perhaps more nuanced strategies. Even though I'm just a regular regular person in terms of investing, I'm not a big hedge fund, right? And that's really where we're honing in and providing that kind of comprehensive platform where really you can execute across a variety of strategies and a variety of asset classes.
Fantastic. Thank you very much, Alexander. So in order to wrap up the panel, I just want to leave you with an opportunity to share any last thoughts you might have for investors. We have some still with us listening in, but we're going to also show this recording to the entire 380 that registered. So what else would you like to leave as a final thought for them, Alexander?
Yeah, I hope I don't sound too technical with this, but to me, crypto investing is going through a paradigm shift where it's going from negative skew type investing to positive skew type investing. Okay, so this is very statistical, and if you're in finance, you sort of know what that is. And what I mean by that is negative skew type investing is really where you do purely value trades, what they call mean reversion, whereas positive skew type investing is really more momentum trades, right? And global macros funds in particular exemplify this, right? And with positive skew type of investing, essentially you are basically having very disciplined mindset where you have a tight stop loss, and essentially you say, okay, I'm going to try and capture this much upside, but I have this much downside because I will be executing on downside wrong, and you just execute trades as many times based on that. And the reason I say that is because when tokens become liquid and everything, and the idea of mean reversion of value is somewhat in the ether when it comes to crypto. In the same way that the value of a currency, a national currency, is also somewhat in the ether. So have those two mindsets. The second mindset is really more momentum driven, where you have the tight stop loss, and because we have never failed to meet stop losses in SFOX, this is something that we really encourage clients to look at. For instance, when it comes to the negative skew mean reversion, I do think really what you're doing in blockchain investors, where your fund of funds is that's really your forte, and I wouldn't know how to approach it myself.
Great. Well, thank you so much, Alexander. We hope that everyone who's interested will check out SFOX. You play a unique role in the ecosystem, so thank you for that. And with that, I'm going to wrap up this segment. So thank you very much, Alexander. I'll see you in the region. I'll be in Hong Kong next week, and hopefully we'll get a chance to meet again in person before too long.
Thank you, Matthew. Thank you, everybody.
Okay, thank you very much, Alexander.
Bye.
Bye-bye.